Knowledge is power. Make an impact by learning more. Call us right now for more help at 866-945-8070. I made a huge profit, but where's all my money? That's the question I get almost all the time from any client who's made a huge profit. And what they're really asking is, why isn't the money in my bank account? And where this comes up often is right around tax time, right? Because that's the first time in a lot of cases, especially newer companies, people less experienced at running a company. That's when they'll that's when they're sort of hit in the face with the fact that they have to pay all these taxes because they made all this money, and they're saying, where is the money? How come it's not in the bank account, right? And that is especially if we're talking about, the tax situation where they have to pay the taxes. Most small businesses are on a cash basis, which means you've actually collected the money. So there's going to be one use case we're going to go over that answers this question. But bigger picture, or I should say that answers this question when it's the case that they have a big tax bill. But bigger picture, I still get the question all the time about, hey, my profit and loss shows that I made all this money this month, but I don't have nearly that much money in the bank. What happened? This can't be right. Usually that's the first answer I get. Of course, the approach is that I screwed up their bookkeeping really bad because they don't have any of the money that the bookkeeping says they made. So there's a few ways to answer this question, right? Let's take a look at a sample situation. And as I often like to do, we're going to, I've got a blank slate here. Right, I've basically got one transaction so that we can see the impact very clearly on the financial statements as we move things around, and this way you'll get the picture of how and why this can happen. So we're looking at an example of a profit and loss where I've earned $1 million in income and I have no expenses, right? So it's real easy to see what's going on here. I've got $1 million in income, and somebody says, hey, I made $1 million. Why isn't it in the bank? Well, in this case, the obvious answer is right there on the balance sheet because it's sitting in accounts receivable, which means I haven't received it yet, right? So bigger picture, when there's a lot more stuff going on, what you're looking for, the first place you're looking is, did my accounts receivable increase dramatically from last month to this month, beginning of the year to the end of the year, whatever it is? Because if it did, that's going to answer your question very likely about why, now that in that case, if you probably wouldn't get a big tax bill because you're paying taxes on a cash basis, which means you wouldn't be paying taxes on this, but you still need to run your business on an accrual basis because you need to know that somebody owes you $1 million. Can't ignore that while you're running your business. So cash basis just for tax purposes, right? Not for running a business. Never good for running a business. So that would be one answer as to why. Now, let's say we received the payment. So we did get the money, which means we would be paying taxes on it. I'm going to show you a scenario here, which explains another reason sometimes why we made all this money, but it's not showing up in the bank account. So let's quickly get a payment from the customer. Oops, I think the customer we used on this is always right. There it is. So we're going to receive the payment. We're going to say we got it back in, let's say February 1st of this year. Well, we'll say March. It looks like the due date was March. So let's say we got it right on the due date of March 17th. Okay, no need to go to undeposited funds. We're assuming we're getting the whole amount and putting it right into the checking account, right? So save and close. And so now we did get the money. Now we won't be asking that question, except that what often happens, and of course it's not so obvious because it's not one huge amount where that's the only thing on the books, but the next thing that happens is the owner takes distributions, right? So I may not even, here, owner contributions. We'll just use that account. Same idea. It's in the equity section. That's all I care about for this purpose. Say he takes the whole $1 million out and says, hey, we made a lot of money. We're going to Vegas. Takes $1 million out, save and close. And so now we're back to having no money in the bank account, or just $1,000, which is what we had initially before we did any business. We opened the account, right? But here we took out we took out $1 million. There's just that $1,000 we put in going against this, so it nets to $999,000. So oftentimes that answers the questions. The owner says to me, hey, you screwed up my books. And I say, no, I didn't screw up your books. You got the money, you invoiced it, you collected it, but then you took it out in distributions. And oftentimes they don't believe me. They say, oh, I didn't take that much money out. So we click in here, and of course what we'll see in a real use case is a list of checks that they wrote themselves. And as I explained in the write-up, I had this exact thing happen where the owner insisted I must have made a mistake. And when we dug in here and we're going through all the checks he wrote himself, there was one check that really stuck out that was for $75,000. And he says to me, "Oh, wow, Seth, I forgot I had to take that money out to pay somebody back." Okay, so I didn't screw up the books, right? So I said to him, I said, "I hope I'm so successful someday that I can forget about a $75,000 check that I wrote myself out of my business." You know, it's one thing to be able to write that check and know that it's going to clear. Another thing to write that check and then forget about it. But the guy had made a lot of money that year and wasn't used to it. So that's often what happens too. Somebody makes a lot of money for the first time and they go crazy and say, "Woohoo," and they think the money's going to last forever. So that's where we have to be really careful about this kind of stuff, of course. Okay, so let's take a look at another scenario, right? So we're going to take that distribution check we wrote, and we're just going to recode it to something else. So you can see another place where it can go that can create the same kind of scenario where I made the money, I collected the money, but it's still not in the bank. Why? What happened? I'm going to use a really simple example of an asset account. The bottom line is it went to an asset account, right? So if I go to prepaid, let's not go to prepaid expense, let's go to prepaid inventory, because that's kind of going to look exactly the same as what it would look like if we had bought inventory with the money. Save and close. Let's go back to my report summary, right? By the way, all this stuff we're doing, P&L hasn't changed, right? We still have $1 million in income and we collected it. That's not reflected on the P&L. The P&L just says, hey, we earned $1 million. That's all the P&L cares about, right? So notice everything else, all the movement that we're doing is on the balance sheet. So we collected it. It's no longer sitting in accounts receivable. We put it in the bank, but it's no longer sitting in the bank because we wrote a check for $1 million to prepay for a whole lot of inventory, right? Or maybe one really luxurious inventory part that we're going to sell. Maybe it was like a famous painting. Anyway, so that's another way to explain possibly what happened, where the money went, right? We got it, but now it's locked up in this prepaid inventory, so we're not going to see the money translate back into our bank account until we get that inventory and sell it, hopefully for a big profit. Hopefully then we'll end up with $2 million in the bank account, right? And this is the risk you run, because what if you have to pay bills with this money and you don't have enough? Now, I'm using a very simple and yet extreme example for the purposes of illustration, but I want you to take the concept away from here in terms of what we're looking for. So, and to summarize, what we're looking for is if we have the net income on the P&L and the money's not showing up or translating into the bank account or doesn't appear to be, then there's really two places or three places to look, which are the three sections on the balance sheet. Either we've locked the money up in an asset, accounts receivable is an asset, so it might be locked up in accounts receivable in that we haven't collected it yet, or it's locked up in one of the other assets like a prepaid inventory or the actual inventory, right? Or it's locked up, it could be in a prepaid expense, which would also be an asset account. It's locked up somewhere in the asset section of the balance sheet. That's what we're looking for. The other possibility, which I don't have an illustration of here, but let's say we had a big loan, and let's say I used the $1 million to pay off debt, right? So that would be a situation where we'd see a liability which had been there before and is now gone or substantially reduced, because we use that cash to pay down that liability. So that's also going to be here on the balance sheet, and that's also going to be a case where we had the money, we didn't lock it up, we just used it to reduce debt, right? But again, there has to be a balance there. You never want to exhaust all of your cash just to pay off your debt and leave yourself strapped, right? Pretty obvious stuff. And finally, there's the equity section where we could have written it out as an owner distribution, right? And that's what I showed you a few minutes ago down here. So those are the three places. Either the money's locked up in an asset, or it's been used to reduce a liability, or it's just been taken out of the business in the form of a distribution. But if it's there in the net income, and especially if you know you collected the money and the money's not in the bank account, then the answer is somewhere on the balance sheet. Hopefully this video now gives you a really clear picture of how to track that stuff down. And if you watch my videos on statement of cash flows, that kind of takes this a step further and shows you how the statement of cash flows can help you analyze this especially when the books are much more complex than what we're seeing here, because the statement of cash flows in the right format, the indirect method, which is what QuickBooks uses, QuickBooks Online uses, the statement of cash flows in the indirect method will show you fluctuations in balance sheet accounts, which will answer these questions exactly. If accounts receivable went up, that means there's money in net income that hasn't been collected yet, and it has to be reduced from net income to arrive at cash. And on down the line, I have detailed videos on statement of cash flows that teach you how to understand it and how to analyze it. In fact, that gives you a clue of what to look for on my YouTube channel. We have a video called Understanding Your Statement of Cash Flows, and we have a video called Analyzing Your Statement of Cash Flows. Isn't it so funny how that works? As always, my name is Seth David. My name is always Seth David. I am from Nerd Enterprises Incorporated. I hope you're having an absolutely fantastic day. I hope you learned something here and had some fun along the way, and I look forward to seeing you on the web.